Next item is a motion of the report of the Joint Committee on Finance, Public Expenditure and Reform on the review of the credit union sector, with specific reference to the Credit Union Advisory Committee review of implementation of the recommendations of the Commission on Credit Unions report June 2016. I now call on the Chairman of the Committee, Deputy John McGuinness, to move the motion and to speak to the motion.
So move. I welcome the opportunity here today to present to the Oireachtas the Credit Union report, which has been deliberated upon by the members of the Finance Committee for some time. I want to thank the members for their input, and I want to thank all of those that appeared before the committee to outline the issues as they see them for the credit union movement. I also want to place on record the work undertaken by the Secretariat to the committee. It was exceptional. It is a busy committee, and they had to find the time within their own resources to ensure that this report was completed in the type of detail that would impress on the Minister and the members of this House the need for the appropriate changes to ensure that the credit unions can continue to service local communities in the way that they have since their foundation. There are 27 recommendations in the committee's report. We've had a reply from the Minister which is favourable towards the various recommendations that we have made. So what I want to do is to bring to the floor of this House the fact that so many members of the House who clearly understand the credit union movement are supportive of what the Finance Committee is trying to do. The credit union movement itself wants to be a co-op movement, if you like, that is fit for purpose, that is up for the change that is necessary to service their customers, and they have brought about their own reforms based on their own due diligence of their organisation. You're talking about almost 3 million members of the credit union movement, serviced through 361 credit unions. So it is a significant contributor to the welfare and well-being financially of the people that they represent, their customers, their members. During the course of the crash, it was forecast that the credit union movement would cost the state €1 billion, and that was far, far off the mark. In fact, it could be said, bar for some minor exceptions, came in pretty clean in terms of their operations. And where there was a need for reform, amalgamation and some other changes, the credit union movement itself moved quickly to ensure that the corrective measures were taken and that the matters that had to be dealt with were dealt with efficiently and in the interest of the movement itself. It is no harm to look back on the work of the credit union since its foundation. It has also always been tightly associated with local communities. Families have used the credit union for all sorts of loans to ensure that they could make ends meet, to maybe put on an extension, to get loans for the day-to-day things that matter in their lives. And it has helped families to move on and to have a better quality of life and a better understanding of financial matters. It has also enabled people who would otherwise have turned to moneylenders to be facilitated within the credit union movement and to be helped out of the difficult circumstances that they may have found themselves in at any time during the course of their family life or individual members of the family. We cannot ignore that, and the cooperative movement right across Europe has shown that it is a significant contributor to the affairs of community and family, and it is the way of the future for families, individuals and for businesses to ensure that they have the right understanding with their credit union, the right conditions with their credit unions in this case, and indeed the right interest rate, and that it is an affordable, sustainable loan that they are given. So credit unions, in my opinion, have acted well and have acted responsibly. So what are they asking for? I think we have to look at the regulation and how it was applied. And it was applied on the basis of one size fits all. It was applied on the basis that it was slow and cumbersome. And we have to ensure that what happens for the future is that the regulation of credit unions is on the basis of their general activities, allowing them to flourish and allowing them to contribute to the significant issues that matter in the lives of those members that are represented through the credit union. So, for example, in terms of regulation, it is a significant burden on the credit unions that even for the smaller loans, they have to ask for so much of the person making the application, that there isn't the flexibility to allow the credit unions, knowing the local history of the borrower, knowing what work is going to be done, that they can make a decision simple and effective based on that. I don't know that many loans that the credit unions have given out that have faltered on the basis of poor information, or that have faltered on the basis of not understanding the means of the borrower and what the money being borrowed was for. So they have a good track record, and the central bank and now the regulator should understand the movement far better and be prepared to provide the flexible legislation that the credit unions are asking for and that the members of this House see as being essential for the credit unions to perform their duties to the fullest extent. In terms of the activities of the credit unions and what they want, I was a member of the County Enterprise Board many years ago when we linked up with the credit unions so that the analysis was carried out by the County Enterprise Boards. The credit unions supported, by way of funding, the projects that were passed. That was an initiative taken in Kilkenny, and it worked. And it was very significant in terms of the small businesses that it supported. And we have to allow the flexibility within the credit union movement to ensure that they can grow that type of business and be an effective lender in the market to those that want to build from scratch or that are small enough to engage with their credit unions. So the level of loans that can be given needs to be looked at. It needs to be examined in the context of what the credit union movement itself wants to achieve. Similarly, in relation to housing, and I know that in recent times the permission has been given for the credit union to invest in some housing initiatives, but it's tiny in relation to what they can do. So I would suggest that their €8 billion of surplus funds should be put to work in a far better way for local economies and for the solution to the problems that we see in terms of growing small businesses, which I spoke about earlier on, and indeed the housing need and the housing crisis. They have a huge role that can be played, and we need to look at that and ensure that they can put their money to work in the context of that. And they want to do it in a constructive, regulated way. The government needs this to happen in terms of housing, and we should allow the credit union movement to do what's necessary to put that money to work properly for their members and indeed for the country. Now, on the committee, we've had discussions in relation to the Sparkassen Bank model in Germany. We've looked at the possibility of, and it's an ongoing issue that's being discussed, the possibility of the credit union movement, their outlets and their infrastructure being used maybe with post offices to ensure that the type of banking system that Sparkison represents is replicated here in Ireland. And I see no reason why the regulator or the central bank should in any way stand in the way, be an obstacle in the way of that type of movement, developing that type of community banking system that has proven to be a huge success in Germany. It was interesting for the committee to hear from Sparkison Bank that they continue to give to their members a tracker mortgage product at a cost of 1.2% interest, that they can loan anything from €5 to 50 million to businesses or projects that are central to the local communities that each of these bank outlets represents, and that the profits from that particular activity, that they go back into the community rather than have a banking system that's driven solely by profit for the directors or the shareholders or whoever it might be. And because of our experience in Ireland of the banking system and the crash, it is absolutely essential that we look at what was a success for us during that period. It was a credit union. When the banks closed in on people, it was the credit unions who made it possible for them to continue in their businesses or to get individual loans to take them over a particular problem at that time in their lives. And we should not, as legislators, ignore the value of that type of community-driven banking system or credit union movement system that benefits members and is focused on the well-being and the improvement of the lives of members in this regard. So, for too long, the regulator has, if you like, listened to the argument, maybe wasn't convinced by it in terms of what the credit unions were saying that they wanted to do, but the time has come for us to show leadership in this. If we truly believe in the credit union movement, if we truly believe their value to family and community, then we should put in place the policy measures that are necessary to give action through the regulator to what the credit unions want to do and what they want to achieve. It's like having a business that is willing to participate, is anxious to get into proper lending, whether it's for businesses, mortgages or anything else, and that we as policy makers and the regulator are actually holding them back. Now, I don't expect us to rush forward either, but I think that we should be far more constructive in how we treat credit unions because of the nature of how they were formed and because of the work that they do locally. And it's, I think, essential for us that, having read this report, that it's not just put on a shelf, that it acts as an incentive for government to engage directly with the movement and with the regulator and central bank to ensure that whatever is necessary to be put in place is put in place in a speedy manner, and that we can then have a flexible regulatory system, that we can apply it to the credit unions in not one size fits all, but in terms of their activities. So you won't get every single branch wanting to do a whole range of financial activities. So they can maybe go ahead in a different tier, and the ones that want to get into detail, yes, we regulate them as much as what is necessary, but not over the top. I listened to the OECD report today and what the Secretary-General had to say about that, and one of the issues they raise in it is the SME sector, the cost of doing business in this country, and the bureaucracy that stands over that business model and how it's regulated. And they say it is too heavy and too cumbersome, that we need to lighten the load of bureaucracy and allow people to perform to their maximum, while at the same time be kept sensibly regulated. And that is what the credit union movement wants: sensible, workable, flexible legislation or regulation to enable them to participate in the solution, be part of the solution to the problems that this country faces. And if we are putting the people first, if we are putting people to the centre of our recovery and of how business is done politically in this country, then the easiest way to display that is through the credit union movement, by giving them what is required and the supports that require to develop fully across the range of financial products that they want to sell and engage in. Last Count Corley, in my opening remarks, I think I was fair and balanced to reflect what is in the committee's report. And the committee's report, as was said by previous speakers, is actually an all-party report, provided by the members of all of the parties in this House, including yours, and it reflects what is needed for the credit union movement now and for the future. And I have to say, Minister, I am deeply disappointed by the scripted reply that you have provided this House this evening. And in that reply, and I quote, you say the functions of the central bank are to administer the system of regulation and supervision for credit unions. As such, it exists to achieve objectives deemed by government to be in the public interest. What is more in the public interest at this point in time than an active, well-funded, well-organised credit union movement servicing families and communities throughout this country, unhindered by the state itself, because it is the state that is now providing the obstacles in the way of the proper, efficient development of credit unions and their movement to best serve their customers. And I have heard every member, including yourself here, praise the credit unions. So in my opening remarks, I asked that the government would give leadership in relation to the credit union movement. And by leadership, I meant that you would tell the central bank that it is public policy, led by government, because that's what you say here, in the public interest, to ensure that we have a movement that is flexible, that is regulated but not over-regulated, that can have the issues of regulation or the issues of the day dealt with in an efficient and proactive manner in the interest of doing business through the credit unions and allowing them to do business on behalf of their members. And that is what contained in your response. What is in your response is the response that has already been given by the central bank and the regulator to credit unions. It's worse now than the Department of Health. Staggering with the amount of reports that we have on credit unions and the need for proper development in this area to support them and sustain them. So we have report after report with very little action. And the leadership that I have asked for from you and from the Senior Minister is for the action to happen immediately. And if necessary, through public policy, for the central bank to be told to get on with it. In our deliberations at committee stage, when this was being discussed and when witnesses were being invited in, the one clear message that was coming across from the central bank was the amount of issues that they have with the credit union movement. And when you examined the issues that they were talking about, there were simply differences in terms of how the business model of the credit union works against what the central bank envisaged for that business model. Well, I've been in business all of my life, and I don't know how you can conduct a business with €8 billion in cash, €12.5 billion in assets, nearly 3 million members, while at the same time you're looking over your shoulder to see what the central bank, who's supposed to be on your side, is actually going to do. So you have dated bureaucratic structures preventing the credit union movement from being what it could be. You have levies for one thing and another that should be removed. You have supports that should be there that are not there, because of the central bank. And what this report essentially was asking you to do was to take a leadership role so that the credit union movement around you and your direction could develop. In part of what was said here to the credit unions, the Minister said €700,000 could be used, for example, towards the various housing bodies. Well, why did you put a figure in it? Why not allow this sensible movement that has sustained itself through the greatest financial crash in the history of this state? Why not allow them to make the appropriate decisions for the model of business that they have? Why not allow them to do what you said was being done, to give the SME sector a chance, to give that individual member that Deputy Murphy spoke about, who wanted a loan of €50, to give them a chance? It would seem to me that there is a role here being played by the central bank in its efforts to protect the pillar banks who are there for profit. And you would imagine that this role is protecting them and keeping the credit union movement, who could contribute so much to the economy, in a box, in a corner. So here we have trouble on the housing front, trouble on the banking front, and an organisation here that has proven its track record, has proven that it has the ability to deal with issues within its own organisation, not being given the tools necessary to put all of its assets to work in the interest of the citizens of this state. And that's really all the report is asking for. And some of the remarks that you have made in terms of your commentary on credit unions would give the impression that they were a bad bunch and that they needed to be kept in line. Oh yes, you spoke about the €1 billion, you spoke about the other issues in the credit union, you spoke about having to, streamline them, amalgamate some of the credit unions, but they were willing to do that anyway. It wasn't as if they were being forced into doing it. There's not an institution or an individual in this state that hasn't been affected by the financial crash. And the one that has been least affected by that crash is the credit union movement. And here we are in this House paying lip service to the credit union movement, telling them how great they are, and yet we're unwilling to interfere or intervene with a central bank that seems to be unwilling to assist a credit union by making fast, efficient decisions to allow a business to grow and prosper, a business that's supported by the people that vote for us. They vote with their feet. They don't go to the main banks. They go into the credit union, where they can get a listening ear, a sympathetic ear, someone that they can explain their personal issues to, and get a loan to get out of the problem that they might have. Loans for cars or back to education, loans for something to do in the house, loans to get over a debt or a death. And we're saying we're not going to deal with the level of bureaucracy and the issues that are contained in this report in a positive way to give effect, or greater effect, to the ethos of the credit union movement. And it is disgraceful that we do pay this lip service in debates like this, but yet the action is not matched to that lip service that we give. And it's a shame on the government that we would find ourselves in this position today, where an Oireachtas committee, who good faith and cross-party presented this report, and now finds itself at odds with a government that seems to be reluctant to move to assist a cooperative movement that deserves the support of the House based on the many contributions that we have heard here today. So here's what's going to happen. The banks over the last 10 years caused a major issue in relation to the tracker issue in this country. Your department and the government did nothing in order to rectify the situation on those trackers. And if it wasn't for the 4 people that came forward and highlighted the issue through the Finance Committee, nothing would have happened. So, for the future, as Deputy McGrath and Deputy Murphy have said behind me, what we're going to have to do as a Finance Committee is to take on the Department and the Central Bank by bringing them to a public session where they account for themselves in terms of their actions, and where they will have to explain their inaction and, on the government side, their lack of public policy and implementation of that policy in support of the credit union movement. That is what is going to happen. And I would urge you to avoid all of that and to take the committee's report and to implement the recommendations that were made in good faith to you. And by the way, Minister, you should have some manners and listen to the debate on this side of the House. So I thank you, Count Corley, for the opportunity to debate this. Minister. I want to encourage the Minister to put his money where his mouth is and to support the credit union movement with the appropriate implementations of the recommendations made by a cross-party committee of this House. Thank you.
That concludes our